Hello and welcome back, Freedom Warriors, to another episode of Essential Talks where you come for the conversation and you leave empowered. We have a very exciting show today. First off, I'm going to say that we're not giving any financial advice, but we do have Jawad on the program tonight, and he coaches for cryptocurrency. And yeah, this is really exciting. This is something I'm kind of into as well. Yeah, he gives coaching and consulting in cryptocurrency, I believe. So why don't you introduce yourself there, Jawad, and tell us a little bit about what you do.
Thank you, Jamie. So mainly what I focus on is teaching people how to use cryptocurrency, mainly Ethereum, and yeah, just the basics, how to use cryptocurrency, how to navigate the Ethereum network, understanding more or less what Ethereum really is, and kind of demystifying things for people, because most people don't really understand what cryptocurrency is. They read a lot of headlines, but don't really understand how to use it. And the education will help them not fall prey to scams, maybe help them decide if they want to ever invest in anything or use Ethereum or any of the cryptocurrencies out there. Just makes it easier more or less for them.
Excellent.
Yeah, it's super fascinating. I think that it's definitely a really interesting tool that's going to be used in the future in terms of trying to get away from our current monetary systems and just having a little bit more control in a decentralized way. One of the bigger things that I come across with all the time is very skeptical in regards to cryptocurrency. A lot of people think it's a scam. And so what would be your comments on that for anyone who thinks that crypto is just a scam and not to bother?
Well, you want to definitely read past any surface level articles, or look deeper into any more or less surface level arguments people will make. There are a lot of scams, but there are generally scams everywhere. Cryptocurrency, I think it catches more headlines for scams just because it's so, like I was saying, it's very mystifying to people. And so something mystifying that can also fraud people becomes it becomes something that people are afraid of. And so I think that where people can kind of just, it's like a shortcut to thinking, right? If I can kind of just brand something, an entire industry, as a scam, well, it makes it very easy for me to, win a self argument, or, put away any kind of self-doubt that I might be making the wrong decision and not look at crypto, or tell people that crypto is just a scam. And then again, you're more or less just kind of making sure that shortcut to thinking keeps continuing with crypto. So first things first is, I would say, maybe look into it, try to understand what blockchain is, what the term cryptocurrency means, and then as well, understand that in this world, everything is decentralized. And so by nature, so is the technology. If you want to verify something, ultimately, you can just look at the code for that. You can see all the test functions, you can see problems they ran into in development, and you can track the historical development of Bitcoin, of Ethereum, of Litecoin, XRP. All of these blockchains that facilitate cryptocurrencies, all those blockchains are open source. So if they want to call it a scam, they have to kind of argue with the available information to the validity of most, if not all, cryptocurrencies. Because like I said, 99% of them, maybe a few corporate chains, are all open source. You can view everything in regards to the underlying functions of the technology.
Interesting. I didn't know that. Well, that definitely makes it a bit more transparent. So what you're saying is just that people who don't want to accept new things or are open to things, they just are kind of more skeptical to begin with, and just because they don't understand something, they'll just basically knock it off as a fraud or as a scam, because
it's easy to brand something that you don't understand with something that can be considered abhorrent, or something that you can want to shun away, because this is this is a shortcut to thinking. Humans are just kind of built that way, right? And it's actually a defense mechanism too. I mean, if generally something is seen as bad, that is evolution kind of making the decision for you, because it's seen collectively as bad. The problem with it is that when it's seen in the lens of the media, you're not getting the real facts. You're not getting really any real information at all, especially today. And then when it comes to something that's so mystifying already, you have even more problems on top of that. So it creates a big issue. So yeah, like with cryptocurrency being open source, you can use websites like GitHub, and which is where all cryptocurrency projects are depositing all of their code repositories. And so you can view for yourself what Ethereum does and how it functions, or any of your altcoins, really. Not even the ones that exist on Ethereum, but other blockchains like Litecoin or Solana, Bitcoin's development. All of them are all open source. So.
And then basically next from that question is always like, well, what gives crypto its value? How does it even have value? A lot of people view it as like, up in the air, digital money. And it's kind of like it puts them out of their element for, commonplace, physical dollars, even though most people bank online, most people use debit cards, and they're using digital money to really begin with. The
Most
idea
money
that
exists online. Yeah.
Well, the idea that a currency that exists solely online, essentially, you can never take out a physical Bitcoin, really. And so the idea behind that. So a lot of people say, well, what gives cryptocurrency its value? Why is it valued like that? Why was a Bitcoin worth, $75,000 for each Bitcoin? Why does it make it? What gives you its value? So I'll let you take the floor on that.
Yeah, that's a great question. And humans prefer physical things too. I think one thing people would want to do is maybe just take a look at how modern currency works, because it's the same thing as you said. It's more or less up in the air, funny money. That's why the term fiat currency exists. It is a Latin, I think it's a Latin phrase. Basically means let it be so, or we agree to be so, or something like that. I can't remember exactly. But you can harken back to other currencies that have existed before. One of the most successful and long-lasting ones is called the tally stick system. It existed in Britain, actually, or England, sorry. But what it was a series of yardsticks that were a measurement of like wealth, a measurement of assets. And so the king would keep one half of the stick, and the other person would keep the other half of the stick. And this was used for general day-to-day banking, trading, from assets the size of houses to assets down to smaller assets, goods and services. And this system was used like widely in England for quite some time. They also did use coinage, which is interesting as well, because coins have been in currencies for thousands of years. But what is giving something value is more or less the agreed upon, collectively agreed upon idea of that value. If it's a stock, if it's the tally stick system, if it's Bitcoin, it's more or less what people are willing to accept paying for it, or willing to accept what it will be sold for. So a stock, for instance, has really no value at all either, because it's all speculative. The value of a stock is only worth what the previous bid was, or what the previous buy was. You really don't have another way to value it. Sure, you can make the argument, and many have, for physical assets, but you can tell that to the Lehman Brothers bank that went under. When they were bought for, I think it was like $2 a share. And so even though they had like physical assets worth far more, there was also the question of how much debt they had too. But that's the reality of how stocks work. It's the reality of how most things work. Value is truly something that's kind of like socially agreed upon. And it's actually built more on trust than anything else. So gold has always been seen as a great store of value because people trust them. They trust it. They trust that others will find value in it. And that value will always be relatively speculative, but you can also pin it to, real world functions. Like, gold can be used in transistors. Gold's got a lot of more use cases in electronics. So yeah, I guess it has more physical purpose, and then you could evaluate the necessary economies to facilitate that, and then say, okay, it's worth X, sure. But take away all that, and it's still relatively speculative, and that true value will always lie in what people are willing to pay for it. So, Bitcoin, cryptocurrency, they find their value mainly on what people trust is the main one, which you can't buy. That comes from the testing and the verification of the underlying code, and then as well too the social, like, networking value. How many people are holding the token? How many people are vested interested in it? How many of them paid X amount of dollars for X amount of tokens at what prices to create the support lines in the chart? And so that's more or less what I think is giving not just cryptocurrency, but a lot of other assets value. Bitcoin's other value case is its hedge against inflation, because there's only ever going to be 21 million Bitcoin ever minted, and that can't be changed. And so it's another way to, you know, protect your value. And going back to what you said earlier, right? Most money is digital. This is a digital way to hedge against digital inflation.
Interesting. So basically, because you can't have inflation on this thing, you can't make more of it, so it's not going to undervalue. It's not going to what do you call it? Dilute it. There's no dilution of that. So while they keep printing more money and your dollar is worth less and less, really with crypto it can only not necessarily go up, but
with Bitcoin.
Yeah, with Bitcoin, that it's just that there's only so many. So
it's good to separate Bitcoin from other cryptocurrencies. Like Bitcoin is a type of cryptocurrency that exists on a certain type of blockchain. There are thousands of cryptocurrencies that exist on hundreds of types of other blockchains that have different forms of consensus. So whether it's proof of work, like Bitcoin's mining, or if it's proof of stake, which I think is what Polkadot is trying to achieve right now. You know, these cryptocurrencies, they are, they're more or less existing, kind of like in a, sorry, I just lost my train of thought there for a second. You made me kind of think about something else there for a moment. Apologize.
No, that's okay.
Same question one more time.
The crypto world is so deep, and having talked with you personally about it, I know how extensive your understanding is about it. So trying to keep it layman's is a little difficult when there's so many avenues and so much depth that go into it.
And I try not to get too carried away, but you know, you want to help people understand things, and so but too much sometimes. Yeah.
Well, a lot of people, I find that most people refer to crypto almost like all cryptocurrencies, like they are all cryptocurrencies. But what you were saying before with the fact that like basically like, all cryptocurrencies are blockchains, but not all blockchains are cryptocurrencies. And so that the actual technology really is blockchain technology. And as to whether or not it gets traded in I think it was a monetary fashion or something, that's how it turns into a cryptocurrency. Is that correct?
Yeah, if you're gonna settle like a payment, or if you're gonna pay for a good and service, things like that, that's when it becomes a currency, because you're using it like a currency, right? Because if you're gonna buy something from the store, you're gonna use, you know, Canadian dollars here in Canada, America, wherever you are, you're using currency. So currency is a medium of transfer.
You can use like an Apple stock, for example, to buy a pizza, and so stocks
like you wouldn't want to use that. That's the thing, and that's kind of what Bitcoin is becoming. It's becoming something that people should more or less see as a store of value, rather than seeing as a replacement for the current financial currency system. A blockchain could facilitate the replacement for the financial currency system, which is an interesting thing that blockchain's use case brings about.
Interesting. Okay. So this is going to sound like a little bit of a convoluted question, because I wasn't sure how to word this in a better way, but how can we end up not having the same forces that control our current currency and manipulate it end up controlling cryptocurrencies if they do potentially become more widely available to use?
I would say definitely education and use. The more people that are using Bitcoin and Ethereum, the more decentralized and powerful those networks will become, and they'll be harder and harder to ever centralize. You know, it's obvious that Amazon Web Services is providing much of the internet structure at the moment. So you could make the argument that I guess they could kind of like, you know, dead man switch the internet, perhaps, with things like Elon Musk's internet in space. That kind of thing is interesting too, because it would provide a way for us to get away from the more or less like grounded internet and have it kind of out of the hands of regular people, so it can be controlled. So I like what I'm seeing there, but to stop the control or centralization of cryptocurrency, it just means that we need more people using it, more people learning about it, because these networks, they scale horizontally, not vertically. So they get stronger and bigger the more people use them, and become far more decentralized. People will be encouraged to run nodes, for instance, on different blockchains. And this just is going to really, really make it difficult for any central entity to ever take control over one cryptocurrency. They might be able to do it over small ones, which makes certain altcoins that exist outside of Ethereum dangerous, because, well, their blockchains can be, through the form of how cryptocurrencies works, their blockchains can basically be taken over. If you get, for instance, if you got 51% of all of the hash power for Bitcoin, you could essentially change the ledger and take over Bitcoin. So if you can't do that, obviously. Bitcoin's a massive network. Same with Ethereum. With a smaller token or cryptocurrency, sorry, you might perhaps get away with that. And so that's something to always think about. So Bitcoin and Ethereum, and the reason why I say, you know, people should use Bitcoin and Ethereum is mainly because they are the biggest networks right now. And Ethereum is not really like Bitcoin. Bitcoin is really just a store of value you can send and receive, whereas Ethereum provides an infrastructure to create applications. And that's where it becomes very interesting. It becomes the hub for all of the blockchains to exist on and run through. And because its network is already so big and decentralized, those new blockchains I was mentioning with the smaller chains actually stand a far better chance of interacting and becoming compatible with Ethereum rather than just running on their own, because Ethereum ultimately is running on all of its nodes, thousands and thousands of validators that are protecting the network. And it grows every day because there's more and more incentive to run a node as Ethereum's price and the total locked value continues to go up.
So we just got flooded with questions in the chat. So
oh, awesome.
We have a couple of questions to ask you. So if you don't mind with the answers, just trying to keep it again as layman as possible for now.
Yeah.
So someone had asked open source code. So does that make it available to hackers?
Not necessarily, no. You know, the code is there for anybody to copy and then create their own version of. So anybody could create their own version of Ethereum. Now, again, you need a network of nodes and of users to actually give that, your version of Ethereum any kind of value at all, as well as developers to then build applications within this new Ethereum that you've created. But the code itself being open source provides you as maybe like, a more just kind of experienced coder to validate what it is they're saying that they're trying to do, and more or less prove for yourself that you can trust this this cryptocurrency, or sorry, this blockchain.
Interesting. So you could technically steal the code and I can make my own, like, Ethereum basically, but like and it would be almost the same, but because I don't have anyone using it, I have no popularity, no one's going to use it, therefore blank. And so it's basically interesting. Okay. Yeah. And so that's a good answer. So next question was, it says, do you need a relationship with a brick and mortar business to make it work? So again, I think that comes from a bit more of a basic understanding with it, but I'll let you.
With a brick and mortar business to make it work. Do I need a relationship with a brick and mortar business? Like, do I need miners? Do I need a mining equipment? I just don't understand the question. Do you need a relationship?
So I think that maybe they think that like if you were, I don't know, like a bank, a physical bank, and then you can make your own cryptocurrency with it. Like, do you almost have to start out as a regular business and then add that on? Or could you be?
No.
Okay.
Anybody can use cryptocurrency. And the functions of crypto. Sorry, go ahead.
Oh, sorry, I was gonna say, and anyone can basically make their own, essentially, if they wanted to. You don't have to have a physical location or anything, so long as depending on, yeah.
You just need a computer, really. You just need a computer, and you could just rent a bunch of servers to create the first initial nodes, or you could run your own nodes, build your own servers if you wanted to. So I guess there's some brick and mortar side there, but for Ethereum, right, they incentivize people to run nodes, to be active in the network, to validate through the payment or through the reward story of their token, which has a lot of value. And so yeah, like, it's not necessarily that it's like required to function. It would enhance it, I guess, if you think about it. If you're running on top of it. So not like Orange or PC banking. I don't know what that means. Banks and cryptocurrency, they exist completely apart from one another. A bank is pretty much a central entity. They don't really there's nothing stopping them, for instance, from just shutting their doors on you. And actually, this is in most banking contracts. Like when you sign your agreements, you'll see that your money is actually not even your money when you deposit it in the bank. And so whereas if I have like a cryptocurrency wallet, like the crypto that's in that wallet, it's mine. It doesn't exist anywhere else other than in the blockchain, but I hold the private keys to that wallet, so nobody else can access it. Nobody else can do any of the transactions on it or freeze my account. So banks are separate entirely in their functions, if that's more or less what the question was about.
And then, people need to keep that in mind, like what happened with, the protests in Ottawa, that how they were freezing crypto wallets, and they were thinking, well, how is that even possible? It's because not your keys, not your wallet. So if you have
Yeah, they
your
were using
crypto,
Coinbase, and they were using their some of
yes.
them. I think some people actually donated from exchange accounts, but again, I don't think that any of the exchange froze wallets. It was Coinbase, basically, is what it was, which isn't hard to understand. I mean, it's a publicly traded company. They have a lot of big time investors. They're going to feel the pressure from political entities, just like any other ones. They're going to fold pretty much immediately, and they did. But anybody that sent Bitcoin, for instance, from like a private wallet, like I was mentioning, where you control the private keys, there's nothing they can do about that, because no one person or one single entity can control the blockchain. That's the beautiful thing about these kinds of networks. That's why, coming back to that original question, like how can we stop centralization, which is what this kind of revolves around. We just need more people using it. We need more people using it, building trust within the systems of Ethereum and Bitcoin, for instance. And that will create a better, more secure, more decentralized network. And it can only grow bigger and stronger. Really, that's the truth about these kinds of things.
Yeah, and I think with the Bitcoin or cryptocurrencies, when it comes down to the value, and it's like we kind of touch base on this, but it's like even gold and silver, what gave it the value was somebody wound up stating what it was worth, and everyone agreed, like you said. Also, diamonds, way back when, it was a group of fellas, I think it was two of them out of Britain, who wound up creating the value of diamonds because they're in an abundance. They're not really short commodity, but they did a lot of marketing in order to create the value of a
The
diamond.
perception of that value.
Yeah, exactly. So it's overinflated. And then when you actually look at money, we're living on hollow dollars because someone said so, right? And
Exactly.
it's funny because when you get the question, how do they give this the value? The same person that is asking that question is literally going to the store and putting their groceries on their credit card.
This is true.
Right?
Yes. Yeah.
So then they're like, well, how does this digital thing work? Well, we're already in digital. You wouldn't be able to withdraw all the money that is claimed to be in bank accounts because it doesn't exist.
Nope. You're right.
We're already in the digital concept. This is just a different way to look at it. And another thing to kind of make a little bit of a division is the way that your digital wallet works. It's almost like having gold. If you have gold or silver, they're in your possession. It's in your control. Whereas if you leave it in the bank vault, anything happens to the bank, you're out your gold and silver.
That's a great analogy.
And you
like that a lot.
You have the equal risk, because if you're holding your own gold and silver, you're responsible for how it is being secured and whether there's any flaws in your security. So if somebody breaks into your house and you don't have a safe and they take your gold and silver, then you lose it. And it's the same thing from your wallet. If you're transferring money and you get the address wrong or anything else, it's gone. So these are you're the security of your own banking system, more or less.
Yes. I like it for that aspect because it makes everyone into an adult. You're an adult. There's adult consequences in an adult world. Be an adult, and if you want to be babied, there's lots of applications that'll help you baby you. But then if you do something they don't like, they can turn around and take it from you, really. And so yes,
what Jamie I think is touching on too is the sacrifice of convenience. So
yes.
You should sacrifice for convenience in certain things, but when it comes especially to finances, this is not something we should be doing. We should not be sacrificing the convenience, of, oh, well, I don't need to worry, for instance, like James said about security, the bank will do it. Well, then you also are, you're foregoing, I guess, the responsibility, and that puts you up to other risks. So you have to ask yourself what kind of risks you're willing to, take on. As for me, and I think a lot of people that are in this space, we want that responsibility. We want that in our own hands because, I don't trust the government or the banking system to reliably manage my funds. And, what it is ultimately the result of like my livelihood and work, that's the truth about this entire thing. And I think that it becomes even more of a insidious thing with banking because these banks are all tied to the same financial system that's printing endless amounts of money. You know, the amount of money in the past 2 years that was printed because of the pandemic situation was more than all of the money printed in like the modern finance history since like the early 1900s. The debt that was accumulated was astronomical. And so that this is something that I think is really why cryptocurrency is becoming more and more looked at by not just like the institutions, but regular retail investors that are starting to recognize and realize what's going on as the cost of goods and services continues to rise around us. You know, I hope more and more people start to see it, because then again, coming back, this will just make them use cryptocurrency and it'll grow the networks, you know?
Yeah.
Yeah.
I think a lot of that you're talking about too is manipulation on the markets, which is very easy to do with stocks, and the same with money. I keep pointing out to quite a few people lately where they're saying, I can't believe everything inflating around me. And I say, I can't believe that everyone believes it's inflation when it's actually deflation of the dollar. Because
they're deflating the dollar.
Yeah, because what happened at the beginning and all through this process in Canada, we tripled the circulation of currency. So if you triple the circulation, well, your dollar is now worth 33 cents.
Yes.
So we're looking at gas, and we know it's going up to about $3 a liter. Before this whole pandemic, it was $1 a liter. So if over the next few months we wind up getting up to $3 a liter, it's not that gas went up, it's our dollar dropped. And so now we're paying the equivalent value for the gas for the deflated dollar that we have in our pocket.
Exactly.
So it's
100%. Yeah. It's what happens to every, it's a death spiral of all types of these types of currencies. You can see it in Venezuela. You can go back to just after World War I in Germany, where the government tried to print their way, you know, out of debt. They tried to print their way out of a recession, and you know that seems to be the modern monetary policy. And I think what a lot they rely on is just the cycles of industry, I guess you can call it, the cycles of capitalism, where you know there seems to be this 10 or 11-year cycle within the capital markets that drives a lot of things. And we do see a lot of innovation. We see a lot of like growth. And so perhaps their monetary policies function around, you know, assessing the different kinds of innovations within the market. And they're kind of, you know, they're speculating on the idea that they need to print more money to match the potential growing requirement for circulation. It's hard to say, you know, like I used to spend a lot of time with different developers that were building certain types of what you could call like stable coins or deflationary and elastic assets. And they had some interesting theories about how, you know, we actually need a potential infinite amount of money in supply. But what we can't have is any kind of stagflation. And we need that supply to contract and expand elastically. And that has to be dependent entirely on some kind of decentralized algorithm. It can't be necessarily in the control of one or a single entity. But they said that the one developer, he said the reason for this kind of like elastic asset was to make up and compensate for the fact that these cycles were kind of inevitable, that there was going to always be dips like that in the market, that recessions are more or less normal. Like, you know, everything in the markets kind of has the representation within the real world in life. Nothing lasts forever. There's cycles with society. I mean, you can see all those old styles from the 70s and 80s. They're all coming back, right? And that's kind of how we do things within humanity. We do like to recycle things, and that does create these kind of cycles. And I think that that shows itself within the financial markets. So there's a lot of philosophy there, I know, as well too. And that's actually the beautiful thing about cryptocurrency. It's heavily grounded in philosophy. So, yeah.
We had a question. Is there a minimum buy-in to get up and running?
No. I mean, well, it depends what you mean. Like, do you want to just buy some cryptocurrency, or do you want to run like a miner, for instance, which is kind of a separate thing? And in that case, you know, you just have to look up the cost of like a cryptocurrency miner. They go for a couple of $1,000s, and contrary to what you might know, you can actually mine several chains with one type of miner. These ant miners, I think there's like a bit miner as well. And so, you know, if it's a new blockchain you're looking at, then perhaps you could buy a miner, mine the new blockchain. But if it's just you want to, just buy some cryptocurrency, that your entry into the market, your barrier of entry is just your risk appetite.
Yeah. So basically, don't bet your rent money. But
No. But if you have
if
money that you want to, invest with, and another thing, like investing in general, should be seen as a replacement for your savings account, because you're going to manage your own money by investing. You're not going to let the bank do it. You're going to manage your own savings account, essentially, and that's the way most investing should be looked at, especially crypto investing. What's a miner? So a miner is a piece of technology that that helps run the Bitcoin network and other networks like Bitcoin. It's really just a souped up CPU that you might find in your regular computer. It's like a souped up version of that, specifically created to mine cryptocurrencies. And its function is to make sure transactions get sent and received, and to run the network, they get an incentive from the network in the form of Bitcoin to make sure those transactions are sent and received. So yeah, that's what miners do.
Interesting. So it's kind of like, so if my business, I'm taking, the debit card, MasterCard, things like that, credit cards, at the end of the month, I, as a merchant, end up having to pay these fees. So what you're saying is that instead of, basically like Visa, MasterCard running these transactions and the whatever, systems that they have to have in place, electricity, all the costs, they put that onto the merchant. Instead, basically the miners are essentially this electricity that's running these transactions. And so because they're using literally electricity from their house, these people need to be paid. But that's why the decentralization aspect of it, because you could just be a miner running it in your basement, and then, you have this like little piece of thing and it just runs it, and then you'll make basically residual incomes off of that, just to
it decentralizes banking in general, right? And banking encompasses savings accounts, it encompasses credit, loans, mortgages. So that's really what the crypto world offers, in the sense of both using it and, for instance, like running a miner. Like you said, you could essentially act as like what would be like the credit card companies facilitating payments, and you're doing it in a decentralized way. And you get to reap the rewards by the incentive of the Bitcoin being paid from the network. So it's really interesting, and it's cool that you have this digital network tied to the physical world. I really always like that about Bitcoin and any proof of work chain, because it just welds the two worlds beautifully so together. Because, like I was saying, these miners, they're specifically created after Bitcoin was created. And so that shows you this created innovation within the real market. That created jobs, that created patents. This is going to continue to create real economies. And so right now, you can start to make those same arguments for Bitcoin's actual value or perceived value in the regular capital markets as you could make for gold and silver and other types of metals, for instance, that are being used in other parts of the market. So it's cool to see that. I've always loved that about Bitcoin.
I'm not sure about this question. I'm not sure if you'll know how to answer this, because I don't know if you know what an EMP is, but how do you recover your account from an EMP?
An electromagnetic pulse event. So say that there's a nuclear weapon that goes off in the whatever atmosphere, or a sun flare, any kind of EMP event. Well, the ledger basically exists in all the wallets, and those wallets are owned by people with the private keys. And so ultimately, as long as enough people had their private keys memorized or maybe written down and not stored digitally, the network could just recover. Because as soon as you turn the internet back on, the internet's, all the information will be there. And so so with a ledger. And so you just use your private keys, you access your wallet, and right back to normal. That's the great thing about cryptocurrencies, is because these private keys are just, for Ethereum, it's 12 words. It's 12 randomly generated words. I myself, I memorized mine for my wallet. And so, I could be stripped naked, taken to the border and shipped to some other country. And so long as I can access the internet, so long as I can access, what everyone accesses in the internet, I'll be able to recover my funds and go anywhere with, potentially billions or millions of dollars. And that's what separates crypto from things like gold and cash, is because you can't make a run for anything with 1,000 pounds of gold or $1 million in cash. It's hard. You could do it, but it's really hard. With crypto, you can do it naked, and so that's kind of the beautiful thing about cryptocurrency. And it's that tie to the physical world. I can write down or memorize my private key, which lets me access this digital space. Fascinating and beautiful thing.
Cool.
Yeah, I think the only thing you'd have to worry about on an EMP is if there was, say, a solar flare that was able to engulf the whole world and knock all the systems out simultaneously. The recovery of that would be insane.
Yeah, definitely. Like you would have to hope that there's enough backups, which I know that there always is. Like there are latency or like these different types of storage networks that take snapshots, more or less, of the entire internet at different points, and then they store them offline. And then this way you're protecting the internet in the future. And so that's a way to protect against that. And I'm sure multiple governments around the world are implementing different strategies like that, and probably even more advanced to protect against things like what you're saying, because the death of the internet, or the death of, like what you're saying, electronics in general, would wipe out humanity. I don't think that we would ever recover from something like that. So we need backups, but it could happen, I guess, ultimately.
So we had one other question here. Oh, there we go.
Do you suggest any cryptocurrency in particular? There seems to be so many.
Ooh.
Yeah, that's a
That
good
gets
question.
that's a little dicey. Again, we're not trying to provide any financial advice. There are
If
some
there
that
was
might
one
be.
cryptocurrency that you would use, because you could use it without ever speculating on the markets, would be Ethereum. Because Ethereum, yes, you could use the Ethereum token as a form of currency to pay for things, but you could also use the Ethereum network to decentralize your own banking. If you want to pull $10,000 out of your bank account and put it into Ethereum, you could use that Ethereum in the Ethereum ecosystem to get a better return on your savings accounts, for instance. And it's more or less the exact same thing that you do with banking anyways. And as well too, there's nothing to mystify you, because everything in the world is totally entirely open source. So if there's one currency I would suggest most people to use or look into possibly using, it's Ethereum for sure.
Interesting. Is it just because of how, like, ubiquitous? It's just used in so many things. It's used as gas, which
it will be used in so many things. I would say it will also open the door for you from an educational standpoint to look at many other cryptocurrencies out there, because most of them exist on Ethereum. And I know that sounds kind of strange, but Ethereum is, again, not like Bitcoin. It's not just a way to send and receive information and store information. It's a way for you to make applications. Think of Ethereum as like an operating system, like Windows XP. Only this operating system is accessible by anybody. Anybody can build an application on it and get users to use it through different ways of incentivizing them, through tokenizing their own network, creating a DAO, making NFTs, giving people access exclusively because of the NFTs they might be holding with their wallet. Now, it's a different function.
Wow. Again, this is going deep. That's huge.
Yeah.
Anybody who feels just super lost with this, I will say that I've actually, how I understood cryptocurrency and its use case and how it's done and everything. There's a number of different videos online on YouTube that do very good video walkthroughs where it shows you in very good imagery as well too, to explain how this all works. It'll explain, Bitcoin, what a blockchain is, what Ethereum is in that sense, what gas means, because anytime you're going to send a transaction to somebody, it's going to cost you. So whereas when I use my credit card at this store, the merchant is the one that pays that fee. Well, you are the one, if you want to send money to somebody, you're going to have to pay a fee for that. And usually it's done in Ethereum. So holding Ethereum is always good. And the more people who are getting on into crypto, they're going to have to use Ethereum. So Ethereum can be a bit of a nice bet there, in that the more people that are going to get onto it and use it, it can be a good, I guess, maybe a holder of value, is a good storage of value.
DAO?
Oh, DAO.
DAO. So DAO, decentralized autonomous organization. It's an organization that runs on Ethereum that no one person owns, that a group or a massive collection of people own through either owning an NFT, a non-fungible token, or owning a number of tokens for that particular DAO. Not to get entirely too deep into it or to confuse you too much, but yeah, so DAOs are kind of like one of those outgrowths that happen naturally from running decentralized applications. It was just a kind of inevitable. They provide a really, really great way for voting systems and other types of organization to be decentralized and not controlled by one entity. An NFT is, it's a non-fungible token, but you could look at it like a piece of art. It's a one unique piece of data. It's a way to verify. Well, you could use it to verify identity. You could use it to verify insurance contracts, but it's essentially an immutable one set of data. And yeah, it's got a lot of use cases, I would say, mainly in insurance, in finance, anti-fraud, identity theft protection, things like that. I know that there's a lot of, like, right now, there's a lot of hype around the NFT because of all the Bored Ape stuff that you're seeing on Twitter or some of the other stuff when it comes to some of the other funny kind of art that you see. But that's just more or less the base version of it. Each piece of art is, a unique set of data. You could use that piece of art as almost like an ID for access to an exclusive club, that only people that are holding one of these pieces of IDs can get into that club. You might ask yourself, what's the use case for that club? But it could be a financial club where they talk about, investing. It could be anything.
Yeah, I've heard a couple of things the way described with like NFT, like what's the difference between a like cryptocurrency and an NFT, and that like with cryptocurrencies that you can break it down into smaller and smaller pieces, and you can,
it's
so you don't have to
fungible.
buy like, yeah, you don't have to buy like a whole Bitcoin. You can buy
Yeah.
pieces of it, but with an NFT you're buying the whole thing. It's like you can't really buy a piece of a house, you buy the whole thing. And so an NFT was essentially something like that.
That's a good way to look at it. Sure. Yeah.
And that some of the use cases for like NFTs are like, there's so many different fake items that have come out of different countries now, and they've become very, very good at it. And so it's a way of being able to validate things to actually show that this is the real thing. That can happen in a lot of different things. Yes. And so like even with stuff like dentistry products or health products, there's a lot of things that like you get fake stuff, and so being able to validated along the way to say like, no, this came from this manufacturer and then this distributor, and everything that everyone along the line was able to place the stamp of whatever their NFT or their thing on it, and that validated that this did actually come from its proclaimed source.
Well, blockchain in general gives you the ability to do that too, right? Because you can just verify transactions, but this is NFT more or less proves the ownership, and as well it carries this like that singular value. You can't break it apart, which you can break apart $1 into, say, 4 quarters or 10 dimes and so on and so forth. You can't break apart the Mona Lisa, right?
Yes.
It's a good way. Like you said, the housing, looking at it like in contrast to a house is another great analogy. I love that. Can the government grab any kind of capital gains from this investment? That would be up to you. If you're investing and you wanted to declare your gains, that's entirely up to you. I guess it would really just come down to declaration, because no one really knows if you're using cryptocurrency, I guess, because it's still anonymous, right? I mean, if you're using a centralized exchange like Coinbase, not so much, because that's not really your wallet, it's their wallet, as well as you've signed up online with your information. But if you're using a private wallet, like I had mentioned before, then you're essentially anonymous on the blockchain. So it's up to you if you would like to declare.
So we'll see if we get any other questions. We're getting close to the point where we typically will wrap up, but I did want to ask, how are the earnings treated by the tax system? So like we were just saying, so if you do declare it, to the government, I have, gay amount of Bitcoin that I've traded this year, you better be prepared to be able to answer the questions of what you bought it at and what you sold it for, because the government wants to treat it like a stock, essentially.
Yeah, and I think, every transaction will be timestamped, and it's all on the blockchain.
Yes.
To your public address. But again, in Canada, for instance, I believe it is still treated as just a regular capital gain. Same thing in the same tax bracket or same tax percentage as like investing. So if you make a gain, you're going to pay the same kind of capital gains on. The difference is that transactions are going to be taxed. And so, yeah, like I would recommend, if you're going to do this, if you're going to declare, make sure that you, like Jessica said, you have your kind of like history of transactions in order, and just make sure you have all the information necessary for any questions that you might get posed to you. And then when your tax bill comes, I would advise just paying it. But again, too, it really comes down if you want to declare it, if it's something that you're looking at, it's more like a long-term investment. How do you view cryptocurrency in the way that you spend it, use it? Some people still, they look at it like digital cash. And so they go wallet to wallet with somebody. They buy, for instance, a car, or they buy another item. And then those transactions they're exactly like cash. They're private and anonymous.
Interesting. Okay.
Yeah.
And so my last question to you was, what are the top tips that you would give anyone looking into getting into crypto?
Top tips. Some of the top tips. So definitely your first one is you never give your private keys to anybody. Never. I mean, obviously, whatever, your spouse. But what I mean essentially is just don't get fooled into, thinking that you have to go on a website and log in with your private keys. It doesn't work like that. If you give away your private keys, your crypto is gone and nobody can help you, because again, this is all decentralized and it comes down to personal responsibility. So yeah, don't ever give anybody your private keys. Try to stay away from centralized exchanges like Coinbase, Bitfinex, Gate, Gemini. The main problem with these exchanges is, well, they're centralized. They could close the door on you at any point they wanted to, or legislation could make it suddenly illegal for them to offer services to clients in certain countries. This actually happened to Canadians. I think it was with Binance just recently, and a lot of Canadians were closed out of their accounts. And I guess some people had it going to their spam, so they didn't realize it. And now they're having to fight for potentially what could be thousands or millions of dollars. That's kind of they're shut out from. Or what happened with Quadriga CX, which was a major Canadian exchange that went down, and the entire wallet was controlled by one person who ended up dying, and they never gave that private key to anybody. So, there's millions of dollars that just is not accessible now. And so, yeah, you never want to put your faith in centralized entities in a decentralized environment, because it just goes against the very foundations of crypto, right? So yeah, stay away from centralized exchanges. That's a big no-no. Avoid anything that sounds too good to be true. Like it really, it's one
double
everybody
your money.
it's one everybody will fall for it, and it's like, it's sad, but and I could say it a million times. But yeah, anything that's too good to be true, you might see they're common, on Twitter. Send you 1 Bitcoin or send X amount of Bitcoin or X amount of Ethereum or whatever it is, and you're going to receive triple back or whatever the heck it is, 5X back. So lost 10,000 in a scam. Yeah, that's terrible. Yeah, I lost money in a scam as well, and it was a passive income type of scam, which is something else I was just going to touch on, because certain types of passive income that are shady, that are dark, I mean, more or less you're giving your money away. And some of these scams are quite sophisticated in their presentation. They might bait you, they might give you a few returns to encourage you to spend more, and then pull the rug out from underneath you once you've spent enough, like $10,000, for instance. And so, yeah, that's unfortunate. So, yeah, avoid anything that's too good to be true, because just like anything, it's probably not. We're almost out of time here.
Oh no, I was just going to say, and like also too, I've heard some pretty wild things about really, really random coins like like Poo Coin and random stuff like that, and just how they'll kind of like do this thing called like a pump and dump essentially, and
any
how it's
any
just like
cryptocurrency, any
hypey
stock.
type things, like anything that's like super hype stuff that can be very dangerous if you don't know what you're doing, especially as an entry level investor.
Yes.
Yeah.
You want to stay away from anything too hype and anything that's too meme sounding and funny, and I say this even on the heels of things like the Dogecoin and Shiba Inu explosions, I don't want to. I imagine a lot of people that do come into this space, they do want to make money, and I don't want to like shoot them down for wanting to do that. And congratulations, honestly, to anybody that does make money within that type of market. But I just don't see the long-term viability for that kind of stuff. So like another tip would be to follow the developers, which is kind of tying into what you're saying. Follow the real developers, follow people that have worked within the Ethereum space for years. You can check their code repository on GitHub. You can verify for yourself what they're doing. They have a massive social networks, a lot of wallet holders, which you can verify for yourself on the blockchain. That's kind of what you want to kind of go towards. It will keep you away from making bad decisions in general. So yeah, so another tip that kind of ties into what you were saying there is follow the developers. Yeah, that'll steer you away from most scams.
Interesting. Okay.
Yeah.
Yeah, basically do your due diligence and your research. Don't just follow along because someone said online that this was a great investment. And
even if it's a group of people, even if it's a
Yes.
group of people saying it, don't just look for yourself. And that's the beautiful thing about an open source environment. I invested a few years ago in Bitcoin, lost $500. So my question would be, like, when you invested in it and the price went down, did you sell it? And if you did, then I guess you've realized the loss. If you had invested Bitcoin, no matter how many years ago, if it was years ago, was that 5 years ago? They said.
They said a few years.
A few years ago, you probably made money, on the macro scale.
If you'd held on to it. That's the thing
Yes.
when it comes to investing. And that's why it's using money that you're almost not afraid to lose per se, because you'll leave it in the market even if it's gone down and not trying to pull out to recoup what it is that you had in there. Holding is a huge thing when it comes to that kind of stuff because everything happens in cyclical waves. Unless something really crashes, like they were hacked, or even then, some things can recuperate. But it's, if something goes down just because the market takes a little bit of a dip, it's being able to get over the emotional aspect of it. Do you have any advice in terms of that and how people can kind of weather that experience?
Do your historical analysis. Look at the history of the chart and look at the price history. If it was a few years ago and the cost of one Bitcoin was down, if I was looking at it as an investor, I would look at that as an opportunity because historically those prices do recover. Even just 3 years ago, there was still enough price data. But you could take that philosophy and apply it to even stocks, right? Older companies, GME, any of the railroad companies, if their prices are down, it might be actually an opportunity. And then you could look at the same thing. Let's be right, and dip hurts, but it means it's time to buy. So yeah, like right now, the crypto markets have definitely turned bearish. I would say the macro scale even is a little bit bearish. We could potentially see a consolidation around here, which was similar to, I think, May of 2021 or 2020. I can't remember exactly, but it looks similar on the chart. Is it time to buy? Again, I'm not going to give any financial advice, truthfully, but just akin to what I was saying before, if you look historically at price action on, more or less reliable assets, you could safely say that the better times to buy any assets is when the prices are kind of going down. So it's more or less of a philosophical analysis there, as well as a personal choice.
Awesome. Well, that's fantastic advice. I really appreciate you coming on and sharing that. I know that because of how deep this can go, it can be difficult to keep things a little bit at a top level. But I think you did a fantastic job with that. Yes, and you gave, I think, a lot of people. I think you gave a lot of people a lot of food for thought. So again, anybody who's gotten really confused over some of this, by all means, I would highly suggest going on to YouTube. I think even actually Netflix has a series, has a couple of things on cryptocurrencies as well.
If I was going to recommend any single YouTube content creator, because most people seem to do that now, go onto Coin Bureau on YouTube. He's a British guy. He does a lot of different kinds of analysis and provides an immense amount of information that's easily digestible. He speaks in that nice British accent, and he speaks really well. And he's been in the markets from the developer analysis standpoint for like 7 years. So he knows what he's talking about. So check out Coin Bureau on YouTube. That's a great resource for information for new investors and old.
Yeah, and if anyone's out there that's looking for, again, consulting or coaching advice or things like that, this is, what Jawad does as a business, really. So we have his website here, so promethea.finance. So you can check it out and see the different things that he offers in terms of what he does for consulting. And yeah, so was there anything else that you wanted to add, Jamie?
Yeah, no, it's this technology is really cool. I wound up looking into it right at the beginning of this whole lockdown stuff, and so I was watching a bunch of stuff from Robert Kiyosaki, and that kind of got me into, because he kept talking about Bitcoin and stuff like that, and then I started to look into the technology a little bit, and then I was learning about the white pages and how to choose alternate coins, and when you actually get into the blockchain technology, if we started really converting everything over to that, because like say an encyclopedia, you could have a whole verse of encyclopedias, and we all know science changes, except for now. It stayed the same all the way through, depending on what country you're in. But other than that, the only way you could overwrite it is once you have enough people that agree that what you're about to put in is truthful. And then you can create a blockchain. And this is why the centralized banking system has been terrified of this, is because it's a way that you can't hack in, and you have to have multi-sources that are verifying everything. And you can apply the blockchain technology to almost every facet of our modern world, especially the voting system. Because then you wouldn't see something that happened in the States with their election, because it would be an unhackable system that you couldn't just flip votes. And it would create the full, true, balanced system. So it can be more than just a coin. And the technology is literally limitless, which is amazing.
Absolutely limitless. It is incredible.
Yeah. And then once we get the quantum computing up and running with blockchains, unstoppable.
Yeah, it's going to revolutionize and touch everything and everybody in every single way. That's the beautiful thing about cryptocurrency. And again, I think just, ultimately, the more people that are even learning about it, that's such a great thing. It's a great sign for the future.
Yeah.
Right. I think we have one last question. Even
if you found a legitimate platform, how can you spend your profit? Well, if you're trying to spend your profit from a platform, not really.
I think they mean like, okay, so let's say you've made some money within cryptocurrency. How do you go about actualizing it and utilizing it in a way that's legitimate?
So most credit card companies now settle in USDC, which is a stable coin that exists on the Ethereum blockchain, and it exists on Solana, many other blockchains. And so, if you wanted to just, convert your gains, whatever they are, whatever token, over to USDC, and you could use any centralized exchange, or I would recommend you use something like Uniswap, which is a decentralized exchange that exists on Ethereum. No one person owns it. And so that would be a way that you could spend your gains. You could have to pay. If you wanted to go through your credit card or go through the bank, obviously you're going to have to settle up your own capital gains taxes, which is not hard to do. But again, that's something that you'd have to work out for yourself. And then you'd be able to spend your crypto. If you want, you can use something like there's something called localbitcoin.com, and it's just a way for people to connect to buy and sell Bitcoin person to person using their wallet to send and receive right there and there crypto for cash. I've used that many times. It's a great way to access any crypto that you might have. And it's another way to do it anonymously, because you're dealing primarily in cash. And this could actually be used for services, right? If a store, for instance, wanted to switch over to cryptocurrency, they could do it today. They just make a Bitcoin wallet. All services are now rendered in Bitcoin. So you come in, you pay in Bitcoin right there, service is rendered. So that's the way you could spend it. It's just about getting people to use it, and more people are using it. So you're not going to have this kind of separation of how do I spend it, how do I access it, once more and more people are using it, because it will replace what we see as currency in means of cash. People will come in and You already do it now. You tap your credit card. Well, you would just tap their QR code with your wallet and just pay them for the service or the good.
Yeah.
Perfect. Awesome.
Welcome.
Thanks for that. That was great.
That was a great question.
The other thing I learned too is kind of going off what you're saying with more and more people using it is I've heard of some companies actually doing their payroll that way. And
yeah,
so
exactly.
Somebody on
Cool.
salary, they just put it in the blockchain, and then they have, if they do the full year and it's the salary, then they're automatically paying their employees without having to do any guesswork. It just goes right through.
Yeah, it's called one of them. These applications you're talking about is one I looked at a long time ago called Request Network. Request Network is exactly what you're talking about. It's coded smart contract functions that take the payroll system out of the hands of people, and they put it on the blockchain, like you said, and it's just a series of smart contracts that can be coded and re-edited to, so for instance, pay people salaries and stuff like that. So it's, it's really amazing the different kinds of the use cases and the ease of use that it can create. Once people do generally use it more, it will encourage more developers to create better UIs so that that ease of use, like the question that was just mentioned there, or statement that was just mentioned there, can become a little bit easier for the layman to kind of grasp. So that's something that will develop in time. Even the original systems, Windows, was not very user-friendly. It's taken time to get where it is today.
Yeah.
Yeah.
Awesome.
That could only have come with users, because that's where the money comes from, right?
Exactly. Well, that was a really educational episode here. A lot. I've learned some things. I did some study before. I always utilize YouTube, but
it's great.
You gave us Coin Bureau.
Yep,
So,
he's a content creator on YouTube,
awesome.
and I think he's on a bunch of other different sites like YouTube. Yeah.
Well, I'm going to check that out for sure. And with anything, the more education you get, the more you start to ask, the more questions you get resolved, the better it's going to be for you. And cross-reference, always cross-reference. You know what I mean?
Yes.
So that was awesome. Well, I'm all done with my questions. How about you, Jess? Got any more?
No, I think I'm good. That was very informative, and I think that was great for our viewers to kind of get a peek into what that world is about, and to kind of dispel some of the myths and kind of criticisms about it, and have a little bit of a deeper look. And it gave some people a couple of breadcrumbs to go seek out on their own if they are interested in doing so. So I'm good. That was fantastic. Couldn't ask for better.
Oh, there's one more question here.
Oh.
Is there a card that you can spend crypto on?
Yeah, you can use a debit card. You could use Crypto's Crypto.com's debit card, or if their Visa card, if you wanted to. I have friends right here in Canada that use it all the time happily. Crypto.com. Check it out. If that's something that interests you, I would encourage you to use it. There's a lot of incentives. You actually get paid in crypto to use it every day. You can go right now when you get one. You can go right to the grocery store, pay for things with it, and kind of like how Canadian Tire will give you Canadian Tire money, you'll get some crypto tokens.
Awesome.
Sweet.
That was great. That was all. I think we got all the questions answered. There's a lot of questions today. That was
really good. I think that was one of the most
the
most amount of questions we've ever had. That was great.
That's good.
Awesome.
Yes.
Okay. Well, I guess we'll call it here. Thank you so much for coming on and educating us and our viewers. And I'm sure this will circulate out there, and we'll probably get more questions in the feed, and we'll try and answer them the best we can. But thanks a lot for being here, Jawad, and have a great evening. And
thanks for having me. I appreciate it.
And to any of our viewers who are looking to, and again, even though we were talking about crypto with this, we're all essential. We welcome any businesses that are looking to have encouragement for staying open if there's anything in the future that we might run into potentially in the fall that could be content issues. And so so if you're if you're looking for encouragement or understanding your rights, things like that. We have lots of resources. We have great Telegram groups that'll really help you out with that. We're also looking for volunteers. So anybody, if you're looking to make a difference in your community and have skills, even if you don't have what you think are skills, we can absolutely utilize you. Don't even worry. And so we welcome you to sign up. And also share and subscribe this. I'm sure there's lots of people you probably know that could benefit from this information. So I think we'll wrap it up for now, and we'll see you next week.
Awesome. See, I got so into this episode, I totally gapped that.
Don't worry, Jamie. I got your back.
See everyone next week.
Bye,
Take care.
everybody.